The sun rises on Mumbai's bustling business district. Shreya, a financial advisor known for her sharp analysis and ability to distill complex markets to actionable decisions, pores over the latest Bloomberg terminal feeds. Headlines blare. Metals rally to record highs amid supply fears. In her glass-walled office, Shreya reviews the numbers. The prices for gold, silver, and copper have surged. Major global drivers include supply chain disruptions, persistent inflation in Western economies, and renewed industrial demand from the United States and China. Data shows that copper is up 35% in the last 6 months, gold has surpassed $2,300 per ounce, and silver has climbed nearly 20% year-to-date. A call comes in from Samir, one of her high-net-worth clients, based in Pune. Shreya, should I allocate a part of my portfolio to metals? Are US-listed ETFs the way to go? Shreya weighs the facts. International ETFs, especially those listed on US exchanges, offer diversification and direct exposure to metal prices. For Indians, US-domiciled ETFs like GLD, SPDR Gold Trust, SLV, iShares Silver Trust, and COPX, Global X-Copper Miners ETF, are accessible under the Liberalized Remittance Scheme, LRS, which allows up to $250,000 per individual annually to be invested abroad. She notes further advantages. US ETFs are known for liquidity, transparency, and lower expense ratios compared to Indian counterparts. Additionally, US-listed funds enable investors to bypass the premium that sometimes exists in Indian ETFs due to domestic gold import duties or limited market depth. However, she balances the narrative. Investing in US ETFs exposes Indian investors to currency risk. The rupee-dollar exchange rate can magnify or erode actual returns. Regulations also include tax implications. Capital gains are taxed differently on foreign assets than on domestic holdings, and dividend distributions may attract US withholding taxes. Shreya compiles actual performance data on her screen. Over a 5-year span, GLD returned 47% in USD terms, while the rupee depreciated by roughly 14% against the dollar, illustrating both upside potential and accompanying rupee risk. She overlays charts illustrative of Indian ETF performances for comparison, highlighting that at times, US vehicles have offered better tracking but with added FX risk. Later, she presents her findings to Samir in a virtual meeting. Samir, metals exposure can be valuable, especially as part of a diversified portfolio. US ETFs are a practical route if you're comfortable with the regulatory process, are aware of tax implications, and can tolerate currency fluctuations. She advises phased investments to mitigate timing risk, recommends seeking consultation regarding tax treaties between India and the US, and suggests aligning metals exposure with long-term financial goals, not for speculation but as an inflation hedge and portfolio diversifier. The scene closes as Shreya drafts a step-by-step investment guide for Samir, beginning with the LRS paperwork and selecting a reputed broker.